Hi, everyone. Thank you for joining this event sponsored by Credit Agricole and Singapore FinTech Festival with the support of the Monetary Authority of Singapore. We have an exciting session planned for you today about corporate onboarding and data portability. Obviously not a new, but a timely topic. After years of initiatives by public and private sectors around the world, regulators, financial institutions, startups, the need for digitization of onboarding and customer interaction has dramatically increased because of COVID. Many companies are now trying to find a new balance between the need to comply with KYC and AML regulations and customer experience in a world where remote interactions are not only expected by customers, but often just the only way for financial institutions to onboard businesses, KYB, or for companies outside of the financial industry to deal with suppliers, KYS. Today's event will be split into two main parts. First of all, a corporate onboarding context, and then a demo run by me. And then a great panel for which I'll be joined by experts from the financial industry and compliance worlds with Anton Redenklo, Head of Financial Services Advisory at KPMG Singapore, Mehdi Soidi, Head of FinTech at DBS Bank, Unag van den Berg, Founder and CEO of Raw Compliance, Gary Chia, Head of Financial Risk Management and Regulatory Risk at KPMG Singapore, and myself as a moderator. Some logistic reminders to start with. The session will last an hour and a half, 15 minutes presentation and demo, and then over an hour of panel and Q&A. The attendees can ask questions by using the Zoom Q&A tools available on your screen. And the session will be recorded and will be available later on online. There will also be a survey sent to you via email for you to give feedback and say what you think. Looking forward to an engaging session today, and I will now share my screen for a presentation and a demo. So just to introduce myself to start with, I'm Pascal Nizri, the founder and CEO of Chekk, this digital identity and eKYC company. I spent 20 years as a managing director working in the financial industry in HSBC, working in France, UK, Hong Kong, Australia, Indonesia. I've been the chief of staff for the retail bank globally, or I've been leading business banking or be CEO in various countries. So I've lived and breathed the challenges of onboarding and KYC from the inside of the financial industry, and I've realized what could be done to solve that problem for the banks and its customers. Let me share a bit more context first about KYB and KYC, and then explain a bit more about who we are and what we do. So obviously, we all know that to prevent money laundering, terrorist financing, sanction evasion, tax evasion, and fraud, regulators around the world are expecting financial institutions and beyond to know their customers. And that's what is called KYC and KYB, know your customers, know your business. But it is easier said than done. At the moment of onboarding, first of all, there are like dozens, if not hundreds of data points and documents being requested. It's more than just taking a picture of an ID or gathering a certificate of incorporation from a registry. There's a lot more to it. And then the banks need to know their customers ongoing, and hence all those periodic refreshes, which usually for businesses are every 1, 2, or 3 years, sometimes even every year based on risk levels. And then there are a lot of challenges because those regulations evolve over time. There's a lot of focus right now on UBOs, ultimate beneficiary owners of accounts, and at the same time also a lot of other regulation around data privacy. And banks need to be very careful about what they know, for instance, GDPR for European citizens, including in Singapore, but also other similar regulation from around the world. So often it leads to a lot of silos in the financial industry world, where you have information not being shared, for instance, for me, Pascal, as a retail customer of a bank, but also as a director of a business banking with that same bank, commercial banking business. Often information are not shared between business lines, or my accounts in Singapore and Hong Kong not shared between the various countries. And I understand why it happens like this. A lot of legacy systems, a lot of perspective about how the regulation should be applied. But the reality is that it creates a lot of duplicative effort and cost for the banks, and a lot of frustration on the customer side, which leads to a lot of drops in the customer base. And obviously the banks want to be very careful with all of that, because otherwise they end up paying a lot of big fines, multi-billion-dollar fines. So the good news is Chekk is here, and Chekk is helping with all of that. So Chekk is a digital identity leader, providing secure end-to-end know your customer solution that in a sense remove the pain and cost from the interaction between companies and their retail and business customers. And we're getting a lot of traction doing so. So Chekk has customers across Europe, Middle East, and Asia. We've been featured by the World Economic Forum in their digital identity report, selected by Sheryl Sandberg, Global CEO of Facebook, to be the first startup to join the first ever accelerator worldwide, supported by also other financial institutions through their acceleration and collaboration programs. And we've won a lot of awards from Microsoft, IBM, and others. We are also supported by Credit Agricole, which we thank for today's session and the sponsorship. And we also have partnership, for instance, with Bureau van Dijk Moody's, to name one of the companies of data we connect to, but also strategic alliance with KPMG and others. So Chekk provide three main solutions: KYB, KYC, and data portability. When it comes to KYB, know your business, we first of all provide the financial institution with an easy way to create an unlimited number of digital forms, be it for KYC, FATCA, and others, in a no-code environment. No need to use many months of IT project to do that. Anyone in the business can use a visual interface to create those forms, create various business rules, simple or complex, based on various parameters, and also classify automatically the risk level of the customers, low, medium, high, based on various usual parameters that can be attached or matching the ones of the bank, country, product holding, and all those kind of jazz. We then connect to the live company registries in over 50 countries, and as well to global data partners. I mentioned some of them. And we then have a unique engine that gives us access in a multi-source engine to give us access to fresh and depth and exhaustiveness of information, to access information for 350 million businesses across 200 countries. And with that, we can find for the business that is being onboarded, the business, the subsidiaries, the directors, the UBOs, not only in the country of a corporation of the business, but worldwide. We pull the thread. And we then create a visual shareholding structure like the one you can see on the screen here. And we pre-fill all the KYB forms with all the relevant information to make it a very speedy and convenient process. And we also then do AML, PEP, sanction, and media screening here. And we have a lot of tools here, physiology, transliteration, phonetics, which enable us to do something which is pretty nice in terms of multilingual searches and so on, like in French, English, Mandarin, Arabic, Russian, etc. So all of that means that we can do the KYB of an SME to an MNC, various type of customers that the bank might want to onboard in a matter of seconds or minutes, instead of the usual days, weeks, months it can take sometimes. Then we do the KYC, which is for retail customers or for shareholders and UBOs of the business. And we here provide, of course, dynamic forms and risk assessment also, but also we have an advanced identity and verification tool based on artificial intelligence and machine learning, where in 15 to 20 seconds, we can do 6 important things. One, we automatically recognize the country and type of document. So I don't have to say I'm in France, I have a passport, I'm in Hong Kong, I have an ID card. Just show the document to the camera and we'll tell you what it is. 2, we scan and OCR it, and not only the barcode, but the actual writing on the document. 3, we do anti-fraud checks. We check for visual features, microprints, holograms, tampering of document. 4, we do selfie face matching. 5, proof of life, make sure you're a real person. And 6, the AML checks. And those 6 things happen in a fully automated process in 15 seconds, but a video-based process, which means that after, there's a video recording of the whole thing available to the bank in case of a problem. So door-to-door, KYC of individuals and UBOs and all in 30 seconds. And finally, the data portability, which basically means that the bank, the financial institutions can enable its customers, businesses and individuals, to keep their KYB and KYC data in a secure encrypted data wallet, where they can use and reuse information across the different business lines and the different countries of the bank to break all the silos I mentioned before, but also even beyond. As a business owner, I have to share every year information with my auditors, which are very similar to what I share with my bank. And here, Chekk provide all the infrastructure, the encryption technology, the consent management at the data point level, the data resharing, and so on, and the digital signature, everything out of the box and ready. So KYB, KYC, and data portability, which we provide to financial institutions and others through various sort of powerful platform with APIs that can be embedded directly to the front end and back end of a bank, for instance, and then give a lot of the capabilities I mentioned before, but only and fully via API to do a lot of things for them. We also have then SDKs that can be embedded directly into their website or mobile app to do, for instance, identity and verification in a very nice way and easy to integrate. And then we also have what we call out-of-the-box SaaS solution that can be used, that can be parametered and used by the financial institution for the staff of the bank, like the portal, and for the customer of the bank, the web and the mobile solution. Keep in mind those terms, because I'm now going to use a demo to share the information and show you that in action. So for the next few minutes, I'm going to be Mary. I'm the banker, a relationship manager working for a bank called Singapore Bank. Mary can use that platform here in different ways. First of all, she can do some people and company searches, AML or company information, to get information back to her and streamline the process in the front line, the middle office, the back office. And for instance, here, if I want to do a company search, I'm going to select that and say I want to do it in Singapore, for instance, on a company, this one, Hyundai. And because, as I said, we're connected to live registries in over 50 countries, as well as that to global data partners, we have access to information for 350 million businesses across 200 countries. So then Mary can see if it's the right business she wants to onboard. If not, she can check if it's a different one. And then she can generate a compliance report, which when I click on this, generate a report like this one. And then that nice PDF report contains all the information about the business, incorporation information, industry codes and all, directors and management, as well as UBOs, shareholders, not only in Singapore for that business in Singapore, but also actually in Korea, in the USA, in Cayman Island, because again, we pull the thread worldwide to give the full picture, even more than what you would have in a normal, for instance, live registry, because we access both live registries and data partners. You also have the key financial information and the AML information in case there's something that needs to be known. And that PDF report can then be used by Mary or the various compliance team and teams in the bank, either the PDF itself or via the API. The IT team can connect our system to their own system with a nice API like this one to do various calls and all, and then get a file, an IT format file that is called a JSON, with the same information than in the PDF, but here in an IT format, or they can just get the PDF via API. So that's one way Mary can then start improving the process for the bank. But then Mary can also involve the customer, and through the invites here of the dashboards, can invite a given customer, in this example, Hyundai, to review the information and top it up, because not everything can be found online somewhere. So when she does this, a link is sent to the customer, who is then prompted to access this. I am no longer Mary in the bank portal. I am now Hyundai, the customer opening an account with Singapore Bank. When I access this customer screens, I see Singapore Bank asking me to do something. I can see the data already there in the platform, even though neither Singapore Bank nor Hyundai has had to do anything. It's pre-filled. And then I go through the various steps. I complete the forms. If I click in there, I will access then a screen with all the entity, shareholders, UBOs, all of that, as I said before, around the world, presented in a nice graph format on the left, in a nice chart format on the right, as I said, putting the thread globally from the live company registries as well as the data partners. If I click on any of those bubbles here, then the KYB form is being displayed for me with various sections and fields depending on what the bank is asking or what the customer is answering. And when I open it, you can see that all that information has been pre-filled from the live registries and the data partners. Incorporation information, contact details, industry codes, which are important for the risk classification, but also financials, for instance, of that business here, as well as documents. So if I open the document section, here we go, we can, for instance, see the financial statements of that business here, sourced from various sources. Then all of that is not a picture. This is something that the customer, Hyundai in this instance, can change, update, or complement if something is missing. So I can change information if I need. And of course, we keep track of all the information. Where is it coming from? So that we can tell to the bank if it's coming from a data source, a golden source, if it's coming from the customer himself, and all of that. And what's interesting as well is that that information you've seen here for the main entity of Hyundai, you can see it also not only for that entity in Singapore, but you can pull the thread. For instance, Hyundai Corporation here in Korea, in South Korea. If I go there, you'll see the forms have been pre-filled as well with information that you wouldn't find in most of the country registry of the main entity. But here we are able to provide information for the parent entity and others all across those different charts here. What you can also then, if you want to go full screen and use it, again, as I said, it's not a picture of that. You can close, you can open, you can say you want to see only the directors, you may say you want to see the UBOs. And then again, because it's not a picture, if you want, you can also drag and drop and say, hey, there's an individual shareholder missing, or there's an entity you can add and modify as you need. And we keep track of all the version, of course, and all the information for the bank after. And then if I look at one of the UBO, for instance, me, the person filling the KYB form for Hyundai right now for the bank, I can fill that information here for that UBO. But if I don't have the information, there's a whole workflow available for the UBOs and shareholders of your customers. So I can just then click on the little button here, and delegate. And in that case, it will send a link to that UBO and shareholder and all to fill the information themselves. And I'll show you after how they can do it, either on this nice platform or in a nice mobile app I'll show you after. When I'm finished, basically me, Hyundai, I can then go into the sharing panel. I can then see that Singapore Bank is asking me to share the information with them, and then I can consent to the sharing of that information, either at a specific data point level, going into each of those here, or the whole thing, because I can select entire file and click on share. And when I do that, three things happen. One, all the information is encrypted and stored in my data wallet for the business, Hyundai, so I can reuse it across the different business lines and countries and my auditors and all. It's not just a form on the bank's website that disappears. Two, it grants access to the bank to those data points, no more, no less, but with the security that goes along with it. It's not an email flying around, as well as with the traceability of the consent. And three, it creates a live link, which means that after, if something changes on my side, on the business side, the bank will have access to the latest fresh information. They don't have to chase me. I don't have to chase them. It becomes a perpetual KYC and ML check. What I'd like to show you now, and I'll use a video for that because I didn't plug my mobile to this call to make it simpler, is how does it work for the UBOs when they are being prompted to share information? So they have the Chekk mobile app or the bank mobile app with our ATK. They can use it and do an IDNV in 15 seconds, video-based process. We automatically recognize document. We do the anti-fraud checks, visual features, the hologram, the selfie face matching, the proof of life. Obviously here we use not a real document to avoid sensitive information flying around. And then all of that is back in the hand of the UBO to be able to validate it and then also to complement it because sometimes the bank is asking questions that are not only purely IDNV related. It might be about additional question that the UBO can fill. And then when they finished, they can go into the form and consent to the sharing of that information at the data point level, important for data privacy rules, or the whole thing. And when they share it as a UBO, then again, three things happen. All that information is stored in a secure data wallet that they can use and reuse. Then it's shared securely with the bank, and there's a live link. And we also provide the bank with an additional channel of communication with those UBOs for various statements, rewards, alerts, etc. Finally, if I go back to the bank here, Mary, I'm back to be Mary, the banker of Singapore Bank, and I'm going to then see the information that is coming back from the business here, Hyundai. And as you can see, we can do it in various countries, China, Singapore, Thailand, Germany, etc. But the one that we are interested in right now is Hyundai. And when I click on this, then Mary, the banker, would access something that is very similar to what the customer was seeing a minute ago, but with a few differences that I like to insist on. Obviously, on the left, still the company graph, or apologies, I'm just refreshing that. The graph on the left with all the shareholders, UBOs, and all of that, and entities around the world. On the right, the same information in chart format. It's still all available as an information here. If I click on the bubble, it's not a picture, I can see all the information and so on. That has been shared by the business and the UBOs. We, of course, show the traceability of where it's coming from, if the customer changed it, if it's coming from a golden source, and we keep versioning and all. I can validate manually if it's part of the bank's process. You can see also the ML check that has been done for that business here, telling you it's okay, there's no problem of ML for that business. You can see also various bank fields only accessible to the bank, like the risk classification here, low, medium, high, based on the risk parameter of the bank. And depending on my role on the platform, I can override it or not. So there's a lot of possibilities here. Then you can also take notes of that customer, and the compliance team can do it as well and all, and it will feed into CRM systems. And then if I show what happens for UBO or director, so we have added one director manually here for the purpose of the demo. You can see Benjamin, for instance, a director that we have added. And basically the platform did the AML check for Benjamin. You can see that it shared his information accessible here that is shared via the SDK or the mobile app, as well as various documents and so on that is done, the IDNV, identity and verification. If you click here, you see the document. Here you see that we check for various features and all. If there's a problem, we flag it to the banker's attention. You can see the face matching we've done for Benjamin and compared to his document. You can see that the machine based on AIML is telling you it's the same person. And all the control we've done on data integrity, tampering of document, because maybe you use a real passport, but you put somebody else's picture on it. We check for liveness, motion, all of that. But if the bank has any concern or doubt, like for instance, here there's a Amber thing, the bank can, compliance team and others can click here and load the video of Benjamin, the UBO, doing his IDNV in a matter of a few seconds. And I'm accelerating just to be quick, but to see the scanning, the anti-fraud check, the face matching, all of that available as a video here for the bank to consume. So then the bank has everything they need to decide and onboard that business, and it's finished. So if I summarize what I've been talking about here, just to finish, the platform is very powerful, obviously. But what I'd like you to remember is that we can do KYC in a matter of 30 seconds for individual customers or for corporate related parties, shareholders, UBOs and all, no matter where they are in the world. We can do KYB in a matter of like seconds, instantaneously, or a few minutes, depending on complexity. And we can do that for SMEs, MNCs and all. And we access information of 350 million businesses across 200 countries, thanks to the live connectivity to the live registries in over 50 countries, as well as to the global data partners that we partner with in that unique multi-source engine that can be parametered for each bank based on countries and preferences of sources and all of that. So quite powerful. So, and we work ourselves as a Chekk, but we also have partnership. I mentioned the data providers. We also have a strategic alliance with KPMG and others. So there's a lot to this company. I'm happy to talk more about it offline another day. What I wanted to do today was just to illustrate, to give you an illustration of the world, the possibilities of KYB already today. What is possible in the world of KYB viewed from today and the various platform and all, with Chekk as an illustration. Now, I'd like to start the panel, move to the panel section, where I'm going to be joined by my fellow experts from the financial industry and the compliance world, and I'm going to ask each of them to introduce themselves. Maybe Anton, you could start, and then Mehdi, and then Unad, and Gary. Please, Anton, off you go.
Hi guys, good to be here. My name's Anton Ruddenfloor. I lead our financial services advisory practice here in Singapore. Just recently arrived in from the UK, and it's great to join you guys at Chekk. Gary?
Thanks, Anton. Yeah, my name is Gary Chia. I'm a partner with the FS advisory practice in Singapore. I mainly focus on regulatory and compliance issues that help my clients, mainly all financial institutions. Yeah, glad to be here. Yeah.
Una?
Sorry.
Boris.
Mehdi, go.
Okay. Hi, everyone. My name is Mehdi. I'm working for DBS, a Singaporean bank, where I'm in charge of including startups and fintechs to the SME corporate banking that we have developed. And I'm also running a newsletter and some social media and videos named What the FinTech, who are focusing on the evolution of fintech innovation in Asia. Thank you, Una.
You're on mute, Una. Una, you're on mute, I think.
There we go. Sorry, I had to click on the screen and click on the speaker. So, my name is Una van den Berg. I've been in the industry coming up 20 years now, predominantly in the compliance space, working for banks such as Citibank, HSBC, Deutsche Bank, Standard Chartered. Most recently, I've set up a global social enterprise called Raw Compliance to increase education across the industry with experience and knowledge sharing, primarily to drive innovation. We do have a significant lack of innovation where we've become significantly reliant on manual processes. What we're trying to do is to see ways in which we can automate and work with the likes of Chekk to see where we can actually bring, modern solutions into what has become a very siloed and mundane and manualized process for compliance solutions.
Thank you very much, everybody. So it's going to be an exciting panel. I have a few questions here, but we can, of course, roll with the flow. And don't forget, in the audience, if you have questions, please raise it in the Q&A system. My first question will be for Anton. So Anton, digitation of onboarding didn't really start last year, right? But obviously, as I was saying earlier in the call, COVID has impacted the world drastically. So could you share with us what you have observed around the world in terms of governments, FIs, and startup initiatives in this space? And you can maybe build also on a lot of your experience around the world, and you were previously in Europe and other places. So yeah, please, if you can share a bit more with us about that. Thank you.
Yeah, thanks, Pascal. I mean, I'll just provide some context because my colleagues on the line are far more qualified for me on the onboarding and the compliance side. But just probably 5 things that have happened over the last year, which have been relatively interesting. First one is the levels of internet and e-commerce have just gone through the roof. So I think people may not know that before COVID hit, although we may use Amazon or Ali quite a lot, the level of transactions going through e-commerce was relatively low as a global share, but it tripled over the COVID crisis, or the crisis continues. And what that meant was that shopfront technology, the likes of a Shopify or WooCommerce, have really started to become much more important to us as consumers, to the SMEs who need to provide their services to keep going, and ultimately to the supply chains. Organizations like Facebook have been trialing new technologies using WhatsApp, Facebook messaging, Instagram, using natural language chat to actually start to communicate with customers. And ultimately what that means is that us as customers and consumers want to use more wallet technology. We trust that more than ever. So the traditional old bank account, the way that that works, is slowly being eroded and eaten away. We did some research in September last year, and we found that actually there's 25% more propensity now to use wallet technology than traditional current accounts for us as consumers globally. A couple other little things, other interesting things that have come out of the COVID crisis. The regulators have taken notice. So they've always been focused on access to finance, social inclusion, ensuring SMEs can get finance themselves. And so we've started to see little pilots running around the world where actually they're testing new technologies. And at the heart of this is really the notion of a digital identity. How do we trust someone that we can't see on the other side of a platform, of e-commerce, on a supply chain, that will never actually meet physically, but we need to be able to understand they're verifiable, they are real people, we can trust money, reputation with them. And I think finally the banks, I'm looking at the pictures of DBS behind Mehdi there, the amazing banks out there, they've recognised actually they're well positioned through the crisis to give really good sort of capital liquidity support to our financial systems. However, probably slightly slow in the way that they do that. And so they are now experimenting with how they become platforms in their own rights. So how do they embed their finance and their technology within our supply chains, within SMEs, in the way that we trade? And again, the big question there is, how do I know who's on the other side of the platform? How do I trust them, make sure they're good people with great social purpose? And that could be credit risk, that could be financial crime or fraud. You look at the UK, where I came from just recently, the government over there has been propping up SMEs in particular with free money. It's estimated that roughly about 10% of those loans that have been given out on bounce back loans are fraudulent. So would digital identity solve that? Possibly. And that's a big number considering how much the UK taxpayer is going to have to pay back over time. So a bit of context there, at least, in the digital becoming real, and then the notion of digital identity being at the centre of what we need to do differently going forward. Hopefully that helps, Pascal. Back to you.
Yeah, it does. Thank you very much, Anton. And a lot of good points in there. And actually, we were talking to Mehdi just before. So maybe, Mehdi, I can pass the ball to you. And we'll talk a bit more about DBS and the bank's reaction a bit later in the panel. But maybe the first thing I'd like to hear from you is some of the points that Anton just touched on, and especially through your work at what the FinTech and some of the community engagement you're doing around Asia. What do you see happening in the region, and especially with the platform economy and the banking as a service rising and all of that? Maybe you can give us a bit more light to that.
Yeah, sure. Thank you very much. And really good points raised by Anton. So it's true that e-commerce and all those platforms using cloud computing have changed a lot in the industry recently. And what we have seen, especially in Singapore and Hong Kong, were not a market where you need to do inclusion of financial institutions, but mostly it's underserved SMEs, even if SMEs are the backbone of the economy, especially in Hong Kong, where 93% of the companies are SMEs or startups, are the needed of digitalization for their different services such as payment. So we have seen Stripes killing the markets everywhere else in the world, and especially in Asia, about payments, facilitating the payment between different countries, but also giving accessibility to everyone who want to create platforms on Shopify, for example, Amazon or Ali, to create that ecosystem that they need. And also what is really important is many solutions are marketplaces right now. So you can connect Stripe to other platforms, but you have also for accountancy, for example, like Xero, that many companies are using right now in Asia. And I think the bank sees the opportunity here to create ecosystems, means to create partnerships who are valuable and where you can catch more data about your clients. Not data just for data, but data to serve better your clients, understand the needs. And what is still really important, even for e-commerce, banks or other companies, is still the cash flow. So how we can give you access to financing, loan, or other services such as factoring via your cash flow, because we can understand it directly from the APIs that we connect with the backend of your platforms. So it's what we have seen. Second of the other things that we have seen is the rise of virtual banks who make digital easier. For example, for traditional banks, sometimes it takes still weeks to be on board as a company, but with the rise of challenging companies for banking, but also virtual banks, it makes the process to onboard a client directly 100% digital in a couple of minutes. And what is behind that change of workflow and process is not only technology, but is also how we redesign the customer journey. So do we need a client to be 40 minutes on the phone to just be onboarded and open a bank account with you? No. And if the person failed to be onboarded by doing a picture of the ID or taking a selfie or completing some of the forms, but he failed after twice or 3 times, the client will, potential client will just give up on the onboarding, right? And as you know, all of them. So how we can bring this person to use it, how we can help this person to be onboarded in several minutes, maybe 10 minutes, 15 minutes, because nobody will spend 40 minutes on the phone just to complete a form, and how we can guide them there. So I think many banks and companies have reviewed what is mandatory to have to open a bank account for deposit, for example, and the different steps for other things like applying for credit card, applying for a multi-currency account, or applying for specific APIs and share the risk with them, and make the process of onboarding simpler and really straightforward.
Thank you, Mehdi. Very insightful. And actually, still on the trajectory of what the banks are doing or expecting or something, I'd like to actually then bounce and talk to Una and ask you, Una, because you lead a community of compliance executive, you do a lot of workshop and seminar with them. And I'd like to hear from your perspective in terms of what has been mentioned by Mehdi, by Anton, what I've showed in terms of the wall of possibilities in KYB. How does it all resonate with them? What are their needs? What are their expectations regarding corporate KYC, the KYB part?
Thank you very much, Pascal. I think that I live in a world of problem statements at the moment across the range of different entities that we're seeing. I suppose starting firstly with traditional banking. Traditional banking, we're still seeing big challenges because of manual processes, and COVID has just amplified those challenges, in particular in the areas of trade finance. And I suppose it's a completely different subject, but we're just seeing a lot of challenges where is there the appetite to move to automated processes? And indeed, if we did that, what is going to be the cost of system enhancements? And secondly, is there actually the financial incentive for large institutions to do that? Or in some cases, are they willing just to pay the fine because the cost of transformation is too high? That's an actual real statement, a problem we're seeing. Secondly, digital banks. We're seeing a lot of high street named banks now moving into the digital space, which is great from a front end customer experience. The problem is in the back end, it's still traditional. So whilst we're getting that onboarding speed on the front end with clients, we're still facing a lot of challenges in the back end with the same issues that the traditional banks are facing: siloed, over-engineered processes, which are largely manual. Then we step into the fintech environment, and one of the biggest challenges in the fintech is, of course, you have a product that's built from a tech perspective, and the builders, the founders, want to build their systems from a tech perspective. So it's a really, really exciting time for a compliance officer to be in that space. But the challenge is the mindset. You're having to bring a lot of traditional compliance officers and basically asking them to equip themselves with technical skill sets to do these new AML builds. And even this morning, I was working with a fintech to basically automate the entire front-to-end onboarding process with minimal physical touch points from scratch, working through a workflow. And it's an exciting journey, but it's a challenge as well, especially because you need a mindset shift with the compliance officers involved. And then last but not least, the crypto firms. The crypto firms are venturing into a space with ever-changing regulation. The regulation is changing every day. Existing processes such as, for example, SWIFT don't translate. So, for example, we're seeing the travel rule coming through. But also as well, interestingly, at a global level, we're seeing institutions such as FATF, who've recently come out this week and said, guys, everybody calm down. Our guidelines were meant to be taken with the best intention. But what we've seen is, as mentioned earlier, we've seen financial exclusion happening. We've seen de-risking happening to an excessive degree across the industry, while countries and entities are complying with FATF guidelines. So I think, in all honesty, at this juncture, we need to take a step back and breathe and ask ourselves from a front-to-end perspective, is what we're doing effective and efficient? Is it sustainable, and is it agile? And I think our biggest problem right now is that agility and that proactive ability to identify changes and risks isn't happening at an industry level, and that's what we need to change.
Thank you very much, Anna. Thank you. Just a reminder to the audience, you can ask questions. Just use the Q&A system in Zoom. Thank you. And actually, I'm going to use one of them to bounce and ask Gary. You know, Gary, we know each other as well, and you have an extensive experience, with regulators, government. You've been involved in various KYC and KYB utilities initiatives across the world, in Asia, in the Middle East. We actually work together in some of those. Can you tell me more about what's happening with those? What's the government or regulators are trying to do with that? Where is it at? The good, the bad, and the beautiful. Off you go, Gary.
I don't know whether which is more bad, beautiful, or the governments are. I think a lot of people are just focused on the COVID situation and operational resilience. But safe to say, I think there's a strong attempt by governments to try to reduce the cost of onboarding. I think it's a good attempt in order to be able to do that. But I think it's a very big hurdle to be able to cross that. I always call it a common good dilemma, right? It's everyone thinks it's good to have, but no one's willing to pay for it or fund it, right? And the big challenge that banks have is because they've already invested a lot in terms of AML systems, bought all these big, invested in a lot of software and financial crime teams doing remediation and things like that. And then the decommission that and then take on a utility is a really big ask for the banks. So, I mean, we all know that if there's a utility or a common company that's able to do all this onboarding and then share that information across, everyone will definitely benefit because you don't have to duplicate it across different institutions. But the cost is quite high. I think one of the big dilemmas that they have is also to have a kind of a common standard to which everyone can accept an onboarding. And banks have different levels of risk appetite as well. So that part in itself, some people use it as a competitive advantage. So the first point that they need to overcome is to be able to agree on certain standards and maybe add on. That's one of the dilemmas that they have as well. The decommissioning costs. And in order to even start a utility, I mean, the biggest thing that you need to do is do the mutualization of information because every bank has different information. And the amount of energy that it takes to come in and share that information across a single view of a customer is one of the things that sometimes put banks off because the cost of mutualization is very, very high. The other thing is obviously, you need a lot more government, and the regulators to really support this and push this down because if you expect the banks to do it themselves, they're all very focused on profit, right? I mean, the best way about, customer experience, what is it, how to make it more seamless, less painful, etc. Right? But of course, at the other end of it is like controls around making sure you keep the bad guys out of the system. How often do you do a review, etc. So I think this is a bit of a balance, and we are also seeing pockets of different parts of the system. So it cannot just happen just by the banks because the banks are just one part of the entire ecosystem. In terms of interoperability, right? You have the security brokers, you have the insurance companies. The informations need to be shared across different types of industries as well, because banks are just one of the ways of, where these perpetrators of this, ill-gotten gains can get through, but there are many other ways as well. And that's where I think, it's only as powerful as if they can get the act together and even cross-border, right? So people can arbitrage between jurisdictions as well, because you're differing standards between maybe, for example, Singapore and Hong Kong. And if you are not aligned or not having, mutual kind of cooperation, then, that can be also taken advantage of. So that's where I think the utility is struggling in that sense, but I think the intent is good. Yeah.
Okay, right. Thank you very much, Gary. A lot of good inputs there. And actually, building on that, maybe I'll turn to the banker in the room. Mehdi, today you're going to be representing banking. So yeah, what do you think about what Gary and the others just talked about, and especially about those fintech trends and the government initiatives and that new balance that has to be found in terms of that experience, that simplicity, that sharing across entities, and it's not always easy for banks to collaborate and share data and all. And on the other side, the fact that it's about control, it's about preventing the bad guy coming in, it's about risk acceptance. how DBS and the banks in general find that balance?
Good question. Thank you very much. And many good points were just raised before. So thanks for sharing. The biggest issue that we thought in Hong Kong was how we can verify the information. Now with the cloud, especially, everything is on demand, and it's everything on our daily life, such as transportation with Deliveroo, with Uber, food with Deliveroo, and many other services such as Spotify for the music, Netflix for the movies. And we want the same thing with definitely with banking. And banking try to catch up with this, but the level of information from banking and also the level of information that we need to control, for example, for onboarding, is totally different. Checking an individual, for example, it's easier than checking a company. And can we directly go to the source via some APIs, even if the bank is ready? Sometimes it's not possible because regulators or companies working on the check of the information of the company are not ready yet. So this was a big issue for many banks at the moment. And there is different way to overcome this, to, for example, collaborate with startups such as your company. And some of the startups have a regular update of the database, but we still need to see if we can have the latest information from the government, for example. Recently, DBS has started and launched, I want to say, since December, the online account opening for SMEs. It can be fast at 8 minutes for single structure companies in Hong Kong, based in Hong Kong, incorporated in Hong Kong, and with a single structure company. But all the companies, all the SMEs, all the startups are not single structure. So the single structure means only one director having 100% of the shares. Sometimes you have holdings, sometimes you have different directors, and they are not also living in Hong Kong, or they don't have the permanent residence of Hong Kong. So it's really hard for us, for a bank and also for other actors on the market, to check the different layers of the company. So if you have different holdings, you need to check holding by holdings, but also if the people doesn't have the nationality of the company where you are, the country where you are. So we have to measure all this document, control it, ask for the upload, but after this, recontrol it, and also see how we can make a control on the individuals, the directors, and the different entities. So there is way to progress. Banks are going there. For DBS, it was one of the challenges that we have solved, I think, and we have a good traction from the companies. But still, we still need to improve the solutions. And you have a lot of fragmentation between the regulation in Hong Kong, China, maybe Taiwan, Vietnam, and Singapore. The rules are not the same. The information sharing is not the same. And also, it's really hard for banks sometimes to collaborate all together, because it costs some money to collect the data, collect the information from the different entities and persona, and they don't want to share that cost with others. So I think the answer is individual, but collaboration with maybe startups or alternative data source provider, it's more suitable for them than a global consortiums from regulators or maybe from private actors in the system or ecosystem.
Interesting. Okay, thank you. You talked about the direction of the big banks and what they're doing and what's possible there. I'd like to also get the perspective from, maybe I can ask Gary on this one, because there's been also a lot of activities going on in Asia lately about the virtual banks. So sometimes from the big players, but sometimes just independent ones. And obviously a big launch in Hong Kong over the last year or two, coming to Singapore now, and then Malaysia. So from your perspective, how about the virtual banks? What are they doing? What are they focusing on in this space? Are they faring better than some of the bigger banks? Are they faced with, in the end, the same challenges that we've just been talking about for the last few minutes on the other, for the bigger banks? What do you think there?
So it's an interesting question. I think, from the very onset, I think it's important to establish that there is no free pass for the virtual banks when it comes to, from regulations perspective. It's the same standards that have to apply to them. Obviously, they use different technology. They're more agile. They use a lot of microservices. But when it comes to AML standards, I think the expectations by the regulators, and it's the same, right? When you're doing onboarding, you still need to come up with the standards of sources of wealth, know your customer, sources of your different funds, etc. So I think the expectations from a regular perspective is there's no free pass. The standard is still the same. However, talking about that, when you talk about virtual banks, they have a very different business model because from that perspective, of course, you have banks that are working with other people, other technology players. But what you will notice that is the virtual banks are actually traditionally non-bankers, right? So in Singapore, you see N Financial, you see C and all that. And they have a different concept of understanding customers because they play to a different type of data that they have with the customer. So you can see that the data that they have is so much richer, right? They manage to not just provide traditional banking services, they actually do provide service to an underserved segment, right? So from micro loans to C and C, B to C, etc. And then they have this idea of a business identity passport. So through leveraging through different aspects of the customer information collected, the suppliers, who are they dealing with and all that. The banks traditionally don't monitor these things, and there's this rich data they can do. So although they use it to enhance customer experience, do a lot of personalization, it also helps them to be able to just manage AML risk because the onboarding experience is that, okay, I know this customer, I know where is it from, I know who it supplies goods to and all that. So they play on a very different means of getting data. And this is their advantage at this particular moment in terms of how they go about doing, understanding customers more. Yeah.
Thank you, Gary. Yeah, very interesting. And as you say, there's no free pass actually, even for the BBs. And despite all the attention and support they're getting from regulators right now, there's no free pass. And everybody needs to do a lot of the things we've been talking about here, whether it's a big player or a smaller player, fintech, even outside of the financial industry. If you want to know your suppliers and all of that, it's something that touches basically a bit everybody. Una, can we start projecting a bit towards the future, I would say, and what's the next thing that regulators are going to look into? What should the compliance officers, the one that you deal with on a daily basis, what should they be thinking about to be a bit ahead of the game in that space?
I think that's a very good question. I'd actually like to comment on a couple of points that have been raised already today. I think one of the biggest challenges is inconsistency across the board. I think Maddie was talking earlier about, for example, reliance on publicly available data. That's a big issue for us globally. And even this morning, as I mentioned, like I was working with a fintech to automate their merchant onboarding procedures, their corporate clients, and the challenge was integrating with the company's register and what data has to be provided. And one of the challenges we have is that the company's registers globally, Singapore, UK are great examples of entities that do it well, but other locations such as, for example, Germany don't do it that well, and we can't place reliance. So I think from a global perspective, we need to start looking at ways in which we can have consistency even in these public listings and public information sources. One of the other big things that I really think we're going to see going into 2021 is much more public-private collaboration. I, for example, sit on the US Department of Justice FinTech Public-Private Partnership. And what's been really great there is to see the DOJ, the US Department of Justice, really wanting to understand the real challenges that are facing the industry. And Gary's right in what he says. It is one size fits all when it comes to regulation, but the regulators are being a little bit more sensible, shall I say, in the application now. Fintechs don't have money like the big banks do to invest in getting it right. But let's be honest, do the big banks get it right? Well, no, because we see that from enforcement action. So I think there is going to be a much more, shall I say, collaboration between the regulators and the industry to kind of strike a balance that we haven't been seeing to date, on how we can implement standards without over-engineering them and really meeting the minimum requirements that are needed. I think thirdly as well, we need to see much more automation, and the regulators are encouraging this. We've seen the HKMA, the MAS, other regulators globally pushing the industry towards automation. I think even last week there was guidance, an industry statement issued by the HKMA in this regard. The challenge in automation, as I go back to the point earlier, was thinking outside the box. If we want to be innovative, we need to be in an environment where there's a psychological safety to challenge one another. And that goes back to compliance culture. And I know that's, again, another discussion, but for innovation to happen, we need healthy conflict. And within a number of organizations, we're not seeing that. Again, we're seeing regulators focusing on culture now and enforcement actions as opposed to the controls and lack of controls or gaps and risks. So culture itself is going to be a massive focus going into 2021. And we need to be challenging ourselves more and taking a step back and looking at our front to end client onboarding processes and indeed client lifecycle management, and just holistically understanding why and where have we over-engineered it? Why are we not automating more sensibly we should be? And with larger institutions, unfortunately, a lot of their data is either multiple sources of the truth in multiple systems or even Excel spreadsheets, or indeed lack of system integration over years of acquisitions and mergers. So we are going to see going into 2021 regulators dealing with a very diverse industry, the emergence of fintechs, the emergence of crypto, and also the lack of mitigation of risk existing within larger institutions that have been around, the traditional banks which have been around for a number of years. So from my perspective, I expect to see a lot more collaboration, and I'm really excited to see as well a cultural transformation in healthy conflict happening within organizations to encourage innovation.
Thank you. And healthy conflict, healthy debate. Not always easy to find the balance there and the right approach, but yeah, very important. And Anton, what do you think the future of corporate onboarding and data portability looks like, actually building on some of the points raised by Una, but also your perspective from various parts of the world?
Yeah. So look, I recognize everything that's been said. I actually, one of the things that the traditional banking industry, and I'm not here to banker bash, by the way, I love Mehdi, he's awesome, gives a good photo, by the way, as well. But but I, in some respects, I wonder whether the question's almost going to be taken out of the bank's hands, because I'm very hopeful that as we see new channels to market for financial services through our consumer brands, through government, through healthcare providers, through the platforms themselves, that we might actually see some critical mass around how identity, digital signals and data and all that sort of good stuff is actually codified into something that's quite helpful and useful. So the point was raised earlier on around supply chains. If I'm going to onboard a supply chain for Ford or Siemens or whatever, I'm talking tens or hundreds of thousands of organizations in that ecosystem. Well, what if a few of those organizations adopt common standards around the use of data, around digital identity, what we call KYC in banking, but you might just call it cardboard verification for corporate purposes? And what if then that builds critical mass? So I go back to the 2000s when about 8 large organizations looked at how they could produce better interoperability within SWIFT. That was the Twist group of companies. That became ISO 1000, 22022. The corporates defined the industry standards. And I think that's probably the thing that'll be quite helpful. It does go to Una's point on public-private partnership, but also I think there's private-private partnership. So that's where I'd be heading, I think. And that's what, certainly my personal mission is, to promote that kind of democratization of your identity and the use of KYC as the platinum standard, but the use of other standards to verify how people trade. And just a final thought, as we increasingly become more digital and our digital signals are defined by this, there's a bigger question we need to ask ourselves as well, which is, what's the right level of public good versus personal privacy? And how do we get the best out of that? Now, personally, I'm very, very open. I want to give people information, but I want to do that in a way that I can permission how my information is used, or someone else can define how they want that to be permissioned so I can access their goods and services. So these sort of bigger questions around ethicality, being over-surveilled and overlooked, privacy, confidentiality, and then finally the security of the data. My data today, as I go around on my track and trace for COVID purposes here in Singapore, means that so far I've shared some type of identity with 3,500 other people that I've been to lunch with or whatever. How does that get used? Could that be good for me? Could that be good for society? The answer is yes to all the above, but it's what we do with it that's going to count.
Thank you, Anton. Thank you. Very interesting. You're having a lot of lunches. So building on the, I'm joking, on that point, maybe any additional perspective on the future corporate onboarding and what's happening in that space? Or do you think that there are things we have not talked about that are going to define where this is all going?
So basically in Hong Kong, we have 8 virtual banks, mostly focusing on customers. And now some of them are moving to SMEs. The trend is going also to Singapore, where MAS has approved a couple of future licenses for virtual banks, and it will be certainly similar. And Malaysia is following also the trend. So except challenging companies for banks, virtual banks will play a big way and will have a big impact, I want to say, directly to the onboarding process of financial institutions, not only banks, but also insurance or financial institutions related to SMEs and corporate. I'm pretty sure regulation will also follow the different trends that we have. And one of the things can be interesting to see as well is how e-currency will play a role on the payment and also on the AML capabilities of the corporate, but also financial institution. So we have seen multiple pilots between the different central banks in Asia, Thailand, Hong Kong, Singapore, and China. And I'm very curious to see what will happen in the coming 6 months or 1 year instead of the onboarding capabilities and also compliance capabilities of these companies.
Yeah, thank you, Mehdi. And yeah, you're right. And the VBs, the virtual banks, are actually quite active in that space. Chekk will have some news in that space. I think next week regarding some of the virtual banks in the region you mentioned. Gary, how about you? Anything else you want to talk about when it comes to the future of corporate onboarding?
I think really there's a lot of activity around all these virtual banks coming in and raising the standard of the type of information. I hope to be able to see a day where all this information with the virtual banks, whether it can be shared in a safe way with other banks to actually manage the risk in the ego. I'm still hopeful that that's the way forward, right? To be able to manage the risk so that at least we can keep the bad guys out, but in a safe way that doesn't pose any competitive threat or risk, because that's the banks one of the ways to manage that risk. Banks are just torn, right? Because if I share information with about my customer, I'm giving away a lot of my competitive edge, but yet at the same time, I also have to ensure that this information is also reciprocated by others so that I can also manage my risk. So hopefully there'll be a day that we'll kind of share the information, a certain level of information in a more utility-like way to manage that ability for us. So I'm still hopeful, yeah.
And it's interesting because you talk about that sharing capability, the data portability, the utility approach, like one of the key to unlock the value of KYC and make it more seamless and easy for everybody. I think I heard earlier some of the other participants maybe mentioning that you think, or maybe I'm mistaken, but I thought that I heard you say that actually sometimes more about the banks working with specific companies to access specific data points more than sharing across themselves. Where is the right balance there? Do we need to do both, or is actually going to be is maybe the dream of sharing information across all the banks in Singapore and actually even beyond a pipe dream? Do we really need it, or actually should we do like Mehdi was saying? No, it's not more about that. It's more about specific banks working with specific fintechs to access specific data points. And again, I'm simplifying here, but I'm wondering how much do we need that interoperability? I'm personally speaking a big proponent of data portability and resharing utilities approach and all, but I'm also conscious that it's not the only answer. So I'm interested to hear a bit of the people's view here from Muna and from Mehdi, because it touched a bit on some of the things you said before.
Yeah, if I may start with that.
Please.
I think what we would like to do versus what we actually can do based on over-engineering of the data privacy requirements, that's the biggest issue here. And interestingly, what FATF have come out this week to do in kind of looking at how their guidelines have been over-engineered and caused some, unforeseen consequences. Data privacy requirements, GDPR, and now what we're seeing in India in implementation of new data privacy requirements, they are limiting and restricting our capabilities, not just in AML, but also with internal investigations cross-border within our organizations. So there are many things that we would like to do in a utopia, in a perfect world, but the restrictions that are happening and the limitations that are being placed on us because of data privacy are a massive headache at the moment. And that is something globally that we really need to go back to the drawing board on, because together on this call, all of us could come up with some fantastic ideas about data portability, but whether it's actually physically going to be possible, that's a whole other discussion. And we need to kind of, again, what I said earlier, stop and take a breath, because these, with the best intention in protecting individuals' data, we're actually limiting and restricting our capabilities to manage the risks.
Yes. Yeah, I don't know if Mehdi or someone else wants to jump in and complement.
So it's Anton here. I think elephant in bite-sized chunks. So if you look at the UK back in 2010, when you're working for the mighty HSBC, Pascal, David Cameron put together a task force to look at, they called it Business Data Initiative. So one unique identifier for a company that you could then permission and use for any organisation across the UK. And the idea was it was utilities, banks, professional services firms would all participate in the scheme, and you wouldn't need to provide KYC or indicia to anyone. You would give your information to one of those organisations. That file would sit somewhere, be verified. It would give you a unique number, and all you needed to do going forward was quote the number to the other institution. So I could sign up with HSBC. Tomorrow I could go to Barclays, give them the number. Barclays could call upon my digital identity, and I can sign up, get my account up and running, and do my whatever I need to do, invoice financing, whatever. Really good idea. The only reason it crumbled, well, there's two reasons it crumbled. One was, again, political appetite to have one set of unique identifiers within the UK. So there's this view that digital identity was politically unpalatable at the time, as the government had failed a few years' time ahead of that to do something. That was one. And then the second was the thing I think Gary talked about earlier on, which was there would be an additional cost for a period of time to run two systems. One, your embedded KYC system sitting within the bank, and then a second, the one over the top, which is the Singapore experience that was born out a few years later as well with the ABS. So one was commercial, one was political. I still think that's the right thing to do. I still think that notion of having a common set of standards that's distributed over time will become the standard. The question is, the world is a big place, right? There are many 100 million SMEs out there, however many corporates and how many consumers. It would take a while to get critical mass to do that. But I think maybe market by market, there is an opportunity to take that approach. The technology is the easy bit. All of the legacy issues that we've heard about, they're the tough bits to solve as well, so-called assets. But that's where I'd like to see the world head. I think someone has to start at some point to make the change. I do believe it'll come from the corporates.
Mehdi, any more views on that?
I want to say there is different schools and different different way to see how to solve the challenge. At this moment in Asia, we didn't see a big trend. I want to say that in Hong Kong, at least, banks are still trying to develop by themselves or collaborating with some of the companies helping to implement the solutions. The thing is, for each market, the issues are really tailor-made, I want to say. They are really specific. So when you can solve an issue in Hong Kong, you cannot duplicate that same system 100% in China or in Singapore. There is some adjustment to do. And at DBS, what I've seen from the tech team that we have here, they prefer to develop it themselves, but they're still checking what is happening on the market and try to see if there is companies who can implement or be even better than the solutions that we have developed, and we can use that solution or adopt that solution as well. But it's true that right now there is no collective effort. The HKMA and few other entities in Hong Kong try to bring one common effort from the different institutions via Hong Kong STP and Cyberport, but over the 2 or 3 last years, I didn't see still now available solutions launched by them. I know that they're still working on it. It take times to create this kind of game changer solutions for an ecosystem. But it's true that if the regulators, with the help of the different actors of the market, can come all together, it will certainly solve a lot of issues, and maybe can also be, I want to say, open to add some fintechs as well to bring alternative data source to that solutions.
Thank you, Mehdi. Actually, that's a very good segue to maybe my last question of the panel before we move to the Q&A part. You just mentioned the activities of the regulators and various things being looked at. And there's been a lot of initiatives and by international bodies or by regulatory bodies, whether it is the Financial Action Task Force, the HKMA, the MAS, a lot of activities, guidance report and publications. Is it enough? Should there be more from the regulators? Is it the right balance in terms of the support they're providing to the community to adopt some of those new solutions? And there are many solutions out there. I showed earlier in the first part of this event, Chekk and how it works. Okay, great. But there are also a lot of other platforms out there, whether it is from fintechs, whether it is from big banks. So should there be more push from the regulators, not only to enable and make it possible, but also to actually even push this type of new solutions to the various financial industry players? Or is it the right balance the way it is now? And I don't know, I'd be happy to hear from the various people here.
I think with a word, if I may start with a word of caution, we saw the detrimental impact of push by regulators to implement systems in the space of transaction monitoring. And what we actually had was various regulators encouraging automated systems, and then banks basically implementing systems that aren't fit for purpose, rules and scenarios that don't work for their client segments, or indeed for the products or services they're providing. So I think one of the things regulators are incredibly cautious about now is making sure that the bank understands the risks that it has in its books before it jumps to, even selecting an automated solution. The challenge we have also you mentioned there as well, Pascal, and rightly so, there are numerous providers in the market, but their visibility is limited. And one of the things we've done with Raw Compliance is we've actually created a tech showcase where we're trying to globally list out all the different types of providers and what they do across kind of the reg tech, the fintech space, so that people can actually understand, well, look, I'm looking for X, Y, and Z. What are the providers? What are the cost points? What is it that I need? So that type of comparative analysis. So will regulators be pushing and encouraging automated solutions? I think we learned our lesson on transaction monitoring to do that too quickly. But on the other side, we need much more visibility of the products and the solutions and the vendors that are in the market. And one of the things that I've been able to do in the capacity in Raw Compliance, which I've really enjoyed, is link up vendors that actually complement each other and could provide a much more complete service if they worked together as opposed to in silos. So we need to see much more collaboration within the industry to regulators, and also as well vendors kind of coming through. And the great thing about the product providers is they're very good at what they do. They're just really bad at marketing themselves. So we need to support them as much as we can.
Thank you for the support. Actually, a very good point you mentioned here, because indeed, what you mentioned when it comes to transaction monitoring and the nightmare it created in many banks, or having being inundated by millions of flags and alerts, that in the end, too much noise on the line and there's no alerts anymore. So in the end, actually, it was sometimes in some places, I'm not saying it's general and everywhere, but in some places it became counterproductive and actually created even more risk, because in the end, too much information is equal to no information, and the real risks were not seen anymore. So that's a good, interesting take on this, and a good way to remind us of that. So basically what you were saying is, I would say it's the regulators are doing a good balanced job there to be enablers and facilitators, but not pushing things to the banks, even if it means a slower adoption. And I agree with your point when it comes to collaboration between various fintech providers. I'm a big believer of that as well. And we have ourselves partnership and collaboration going on with various companies. And I think it's a big part of the solution as well. But I'm curious to hear from Anton, Mehdi, and Gary in terms of that balance. Is it a good balance? Do we need more from the regulators? Is it plenty enough?
I think we need more from the regulators, Pascal. The OCC, the PRA have got their teeth into credit over the COVID crisis. You would have seen there's some public announcements there, plus some letters that went to CEOs. And essentially what they're saying to the CEOs of the banks, and DBS is not part of this, so kudos to DBS, is show us how you're retaining data and information to make the right decisions around corporate and commercial customers. Show us the governance around that, and tell us how you're building talent and competence around that space. Effectively what they're saying to the banks is show us how you're digitally assessing credit risk and promoting that in this particular environment. And so they're putting pressure on the banks to not necessarily comply, but certainly explain why they're using paper still to make credit risk decisions. Big fat files of paper, and middle-aged white men like me using judgment to do that. So you could sort of say, well, that's forcing the boards to think around things more clearly and respond. And one of my clients has put a great dollop of cash next to that now to digitize their lending processes. I don't think it's too far to then sort of come back on the fin crime elements, particularly when it comes to CDD and KYC and maybe FATCA, and say, show us how you're using data more effectively to manage the risks, and how you're making that a far more seamless, intelligent process. And maybe also show us how you're using that same data to support the credit risk processes we just sent you the letter on last year, because the same data, right? So I think they should put a bit of pressure on to make this happen, but they shouldn't issue new regulations or new forms of compliance, because what we know happens in large legacy institutions is they spend enormous amounts of time and effort just complying. So it needs to be more of a softly approach to promote innovation and digitization. Gary, what do you think? You're the expert.
Yeah, I was about to lend it to Gary because I could see him moving on his chair.
So I personally don't think that MAS will push for any particular solution, etc. I think the onus is really on banks to assess their own risk. Of course, there are a big push in terms of technology innovation, but banks are also very creative. A lot of people, they'll start thinking of ideas on, oh, how do we do perpetual KYC? I don't need to do seasonality, it's trigger based, I'll do all sorts of things. Then, MAS will start to ask a question, or regulators will start to ask questions, how do you calibrate? How do you ensure it's accurate? Are you picking up the information and all that? So I think they have a right balance in terms of getting an overall risk-based approach. I mean, the proof in the pudding is really basically how many of the banks have allowed some of these evil or not so good people through the system, right? So if your people are not capturing it, that proves, no matter how much you push your technology, is it a tick in the box? Are you really keeping the bad guys out? I think essentially that's the essence of it, right? Yeah.
Okay, thanks. It's interesting to hear actually various complementary but various views in terms of, is it enough or should it be more? I was wondering if it would be like all in one camp, but it's not. I don't know if maybe you have a different perspective on that, or
the only thing I can add here, it's like regulators have adapted to new technologies recently a lot. There is a lot of disruption on the market, not only on onboarding or eKYC or ML, but also on the crypto, on the lending. So it's really hard for them to catch up on all the vertical and all the disruptions in the same time. So they are making a lot of effort, I think, and more than they never did it before, to adapt themselves to all those different changes and to protect the customers, to protect the corporates, and protect all the citizens. Like I think the progress will be even better in a couple of coming months or years. And when everything will be set up, it will be perfect for everyone.
What a beautiful world it will be. But no, actually, a very good point. You're right. There's been so much activity going on, so much new tech development, so much new platform. And indeed, the regulators in many countries, maybe not everywhere, but in many countries, did a good job to actually keep up. And some countries are more advanced than others. I mean, we know there's always debate about that, but clearly we see a lot of interesting initiatives going on. So yeah, thanks for reminding that. So from a panel perspective, I'd like to move to the Q&A part from the audience. Remember people, if you want to ask questions, please use the Q&A tool. We have a couple of questions from the audience. one which will be more for me, and one which I'll open to the group here. The first one from Anthony Watson-Hill, building, I think, on the demo I did earlier. Anthony is asking if a corporate customer updated a field in their data wallet that is shared with one of their banks, will it automatically be shared, noticed, or notified with their other bankers, or will they need to share consent with each bank individually? So the way it works in the platform I demoed earlier, and there are various ways to skin that cat and to parameter it actually. By default, the way it works is that it's back to the digital identity and the digital wallet that Anton was talking about and I demoed earlier. When it's done, actually, when the KYB is being done by a business, in my example, Hyundai, all of that is stored in their data wallet, and then they consent to the sharing with that Bank of Singapore that was in my example. If then after there is another bank asking access to the data, they don't have to restart from scratch. The data is already in their data wallet, and they can consent to the sharing of those data points that they ask, might be the same, might be different ones, to that second bank. But then there's consent being done with bank number 2 as well, because it's important that whether it is for my business information or whether it is for my UBO's information, I want to be sure that from a data privacy perspective and so on, and doing the right thing, the customer has the hand on this and can consent to sharing of information across the multiple parties and across the different countries, because bank number 2 might be in Singapore also, or it might be a bank in Hong Kong. Then though, when it's being shared with bank 1 and bank 2, what's behind it is the same data point. If I shared my certificate of incorporation, or if I shared the UBO's passport with bank 1 and 2, I consented each time to sharing it to the various parties, but it's the same data point. So if I update it later on, then it will be reflected through what we call the live links. So update once, update all. Me, the business owner, if I update a document, if I update any information, it will be reflected to my various banks and partners and others that I've shared the information with, as long as I've consented to share it with them in the first place, and I didn't take it away after. So that makes it much easier for everybody in the process, even though you need still to re-ask the proper consent. That's important in the first place when you establish that link between me and my bank and me and my bank number 2. Then after, there's an ongoing facilitation and refresh and sharing and sync up of information that makes it much easier. So that was the first question more for me. There's another question from Dan Feeney. It's asking, the question is asking, why doesn't a supranational kind of organization like SWIFT play a more proactive part in digital identity and cross-border data solutions? And Anton, you touched a bit on that earlier. I'd be intrigued to hear you comment on that first, and maybe the others after.
Yeah, it's an interesting idea, isn't it? I mean, there are slightly different set of use cases over there, but there is a connection between obviously payments and transactions and identity. So we do need to find a home for this. Probably Una would be closer to this, because I think there are lots of supranational organizations in this space already. But yes, SWIFT are obviously developing innovation capabilities. They have sandboxes set up, and you've got all the banks participating already as part of that cooperative. So it's quite a cool notion. What do you think, Una?
I couldn't agree more. You know, there was, you know, a number of years ago, we started toying with the idea of using blockchain technology in kind of KYC AML, which kind of fell flat in its face, because the big question was who will own the ledger and where will that sit? And, you know, as Anton was saying, we already have a lot of data in existing systems that we use, such as SWIFT. So why aren't we, instead of reinventing the wheel, utilizing information that already exists in these systems and seeing how we can actually create cross-border and global systems that already have the data for an intention and purpose that they weren't initially created for? And as you know, as I mentioned earlier, obviously, you know, because we can't apply SWIFT to the crypto space, implementation of the travel rule is coming through. But again, we've only had less than a 50% take up because of the lack of technology or indeed appetite for implementation. So I couldn't agree more. We kind of need to look through a new lens at existing systems that exist at a transnational and global level and see what we can do with them as we move forward into this new digital age.
Yep, good point. Mehdi, Gary, anything you want to add to that?
No, I'm just wondering what would their incentive be, you see, because they are a commercial enterprise. I still feel that there needs to be, you know, some way of getting people to be motivated to do things that, you know, it's the same thing like a common good. We all know that it's good, but what is it for Swift unless they can see a commercial benefit to them, because they also have a P&L. I'm just wondering, you know, how do we get all these people to come and rally together to do something that is good for the common people there. And that's the real challenge, right? Unless we get governments in or regulators to push, people just look and tend to look after themselves now. I'm just putting it out there.
What do you mean, Gary? The greater good of the world is not a good enough objective? I'm surprised.
Sounds like a non-profit coup. Swift is a non-profit coup. Yeah.
I think, Gary, you made a point there, which I repeat like a broken record time and time again. We talk about kind of AML and KYC and the work that we're doing in a very sterile environment. But the truth is, in a worst case scenario, there are people dying on the back end of when we get this wrong and can't identify the perpetrators. So there is human trafficking, modern day slavery, you know, child exploitation, you know, drug trafficking. This is actually happening. And, you know, you are right. There are organizations and it is about kind of P&L, but we generally, and that's one reason I set up Raw Compliance, we need to stop thinking about things with a profit margin, and we need to actually rather look at the fact that we have a responsibility to get this right for the greater good. And I know that sounds very utopian, but there is a way we could do this to support SWIFT. There is, you know, funding, regulators, industry providing funding. Again, I know that fell flat in its face when we looked at KYC utilities, so that's a whole other discussion. But you know, there is something we can do, and I think rather than looking at the problem statements, we need to. There always is a solution.
Yeah, and I don't think Swift is focused on P&L actually. So maybe they are actually already very active in that space, whether it is something that we know of and that is communicated about, or whether it is something that there are a lot of initiatives happening in the background that some of you might be involved in.
So Swift is mostly interesting on the payment solutions and channel to reconcile the transfer of money between two entities. And I'm pretty sure they are mostly active on API to solve those issues of cross-border payment or reconciliation between two entities doing a deal together and eKYC solutions or alternative data source.
Yep. Yeah. Okay. I think that's pretty much it when it comes to the questions that we can answer today. Is there anything else that anyone in the panel would like to add before we bring this to a close? Nope. Excellent. I think we covered a lot of things then. It was quite an exciting session. So obviously, as we've heard in the last almost an hour and a half, there's a lot already possible in the world of KYC for financial institutions and other companies. And again, I've illustrated it in the demo in the first place, but we've talked about a lot of other kind of topics and concepts and initiatives. And so there's a lot going on in that space. And it's also quite exciting to hear where you guys think this is all going to with the alternative data sources, with some of the government initiative, interoperability, yes or no, and where the regulators are evolving. So really quite a very interesting and engaging session. So thank you very much to the panelists to have joined this, and it was really a good mix and good complementary views. So thank you for that, everybody. And I would also like to thank our audience for having joined this event today, sponsored by Credit Agricole and the Singapore FinTech Festival, with the support of the Monetary Authority of Singapore. We hope you have all enjoyed it. As I said before, the session has been recorded and will be available online later in the week. And there will also be a survey sent to you all this week to get your feedback. Please let us know what you thought. And I wish you all a great day and a great evening. Thank you very much.